Good morning, everyone. I'm John Kogan, the CEO of Proformative, the online community for corporate finance, accounting, treasury, and related professionals. First, I would like to welcome everyone to this morning's webinar, Quick Guide to IFRS and XBRL. This webinar will cover a review of the proposed IFRS standards and convergence with US GAAP and associated financial reporting requirements. We will also discuss XBRL, what's going on in the world of XBRL, where those standards are, and along the way we'll be covering an awful lot of ground. These are very big topics. They could each deserve their own hour, but we like to jam as much into a smaller space as possible at Proformative to let folks know essentially what else they need to know and to give you a good grounding in the basics. So that's what we've got ready for us this morning. And we are looking forward to giving you some excellent knowledge and information. I would like to thank Host Analytics, who has helped us make this event possible. Like all Proformative events, it's free, and that's a wonderful thing. So we appreciate their support, and they're a frequent supporter of all things Proformative, so a great thanks out to Host Analytics. Also, I would love to thank our two speakers before we get to them this morning, and I will introduce them and give you some backgrounds. But Sunil Thukral, who will be talking about IFRS with us this morning, and Lucy Lee of RoseRyan, who will be talking about XBRL. So wonderful to have them on board sharing their knowledge and insights with us today. A quick note on today's agenda. First, we will hear presentations from our two speakers, and then we will move to a panel discussion where we will spend the remainder of our hour. We would like this to be an interactive experience for you. So if you have any questions at any time, please feel free to ask them via the question area in your GoToWebinar control panel. You might want to take a quick look at that now. In your control panel, there's a little area marked questions. You might have to hit the plus to open it up. And feel free to hit us with questions anytime. We will have 10 to 15 minutes to take those questions at the end of today's webinar, so we'll just let them queue up and feel free to toss them out at any time. We will be offering CPE credits for the CPAs in today's audience. If you have any questions about that, you can contact Dawn Moore, and her address is dmore@proformative.com. Any questions at all about CPE credits, she'll take care of them for you. If you've pre-registered for CPE credits, you will simply get an email with your CPE certificate within 48 hours of today's event. Speaking of today's event, the deck is probably already out on Proformative. They typically get them posted just before we go live with these events. It's in the area that we call resources. So if you go to Proformative and click on Community up in the top navigation, and then there's an area called Resources. You can find the deck for this event. Actually, after the event, we will also, in the Resources area, post the recording of the event if you want to share that with anyone. And Resources is also a great place to find, well, more resources on IFRS and XBRL. And also, if you simply search Proformative under those two topics, you'll find a host of conversations, discussions amongst finance, accounting, and related folks, and resources available. It could be anything from white papers to other knowledge-based documents. So strongly recommend you check that out. Actually, Sunil is a frequent contributor in that area, so you'll find lots of good stuff there. Now, a quick word about Proformative before we get going. This is the first Proformative event for some of you, and we just want to give you a little bit of insight into who we are and why we're here. Proformative is the largest online community for senior finance, treasury, accounting, and related professionals. You don't have to be senior. We just happen to be largely senior. Most of the conversations are among CFOs, controllers, et cetera, but we've got plenty of folks at all levels, and everyone is welcome. It's a completely noise-free community. There's no advertising. There's no cost. There's no self-promotion allowed, so you'll never hear someone hawking their goods in the community on Proformative. I like to refer to this as the most boring community on the network, on the internet, sorry. All we do is ask questions about work and get answers from our peers and subject matter experts. So it's a really handy tool to have, and anytime you have any question at work, whether it's how do I create a new subsidiary in Hong Kong, or I'm having an issue with IFRS preparation, can anyone help me out, you'll find answers on Proformative. So feel free to check it out. As I said, it's free. It's an amazing resource and very handy for those of us who do finance, accounting, treasury, or related things for a living. And we have a number of learning objectives today, but as I mentioned earlier, primarily we want to give folks a good grounding in IFRS and XBRL and where those two topics kind of sit in today's U.S. corporations. And to get us started, I would love to introduce Sunil Thukral, who is a CPA and a CFA. Sunil has 15-plus years of business experience working with SMBs as well as Fortune 1000 companies in a variety of industries. His background includes technical accounting, including GAAP, IFRS issues, SEC and external financial reporting, process improvements, compliance, GAAP conversions, and audit readiness. In his career, Sunil has effectively dealt with a wide range of complex and non-routine transactions under U.S. GAAP and IFRS. He has worked with various accounting standards, not limited to M&A, accounting and due diligence, share-based payments, consolidations, restructurings, foreign exchange, off-balance sheet exposures, and a whole host of other issues. Sunil is an active certified public accountant and chartered financial analyst, and he's going to take us through the first half of today's presentation. Sunil, please take it away.
Right. Thank you, John, for the kind introduction. Hello, everybody. Today we're talking about, this is the first of the webinars on the IFRS and Proformative. So, and a lot of people I see are pretty new to IFRS concept in the US, some are not. So I've tried to gear this presentation to everybody based on, might be of mutual interest for everybody here. So what we're going to talk about today is the key what's happening today in the IFRS arena. And I'm going to just take everybody through a simple kind of rules for the principles exercise. Like we do talk about US GAAP is rules-based, IFRS is principles-based accounting standards. So just have a quick fun exercise so that you can appreciate this discussion a little bit more. And lastly, we'll just go as to what can I do today. And as John did mention, there'll be a lot of resources on the resources section of Proformative. You can certainly check in there, and based on what kind of feedback I get from you, you can let me know, and I can keep on posting some resources for you so you can keep coming back and checking the resources there. So moving on, this is like a screenshot from the SEC website. So what happened, just giving a little bit of perspective over here. There was an MOU, like in 2002 onwards, it was SEC, FASB, they had been thinking of having a kind of accounting standards that can be used throughout the world. So that basically resulted in signing off a memorandum of understanding, which was signed in 2006, that was amended in 2008. So what you see on this page, that's basically a result of that, the MOU that was signed. If you look at the bottom part, so that was a major step by the SEC. The step that was taken was it started accepting the financial statements as prepared under IFRS without reconciliation to the local US GAAP. So just to give an example, if a company outside of US were to file under US, in the US, they had to actually reconcile their income statement and the balance sheet, the equity, down to the US GAAP numbers so that the people in the US or the investors in the US could actually understand those financial statements. So in 2007, the SEC relaxed that requirement and said, okay, if you're filing the financial statements under IFRS, you do not have to reconcile it to local US GAAP. So this was a huge step. So if you see from that particular perspective itself, the IFRS became a huge importance. Like you have to understand IFRS before you start investing in those companies which are outside of the US. Subsequent to that, if you see the first section of the roadmap for the US issuers, SEC did issue a roadmap. This was issued in 2009 on the next slide, basically, I'll take you through the comments on it. The key kind of comments that came out was the cost. The cost of adoption, the IFRS, is going to be huge. Like, should we even go there? Why do we need to go there? And SEC did some kind of preliminary studies, and it said it might cost you close to 0.12% to 0.13%, close to about $30 million for big-sized companies to implement it. So this cost is huge, especially when the economy is going down. No one wants to incur new costs over here. Then there was a debate on convergence over adoption. Like, should we actually converge? Like, let's try to have similar kind of accounting standards, or should we just adopt whole IFRS and just throw the US GAAP away? So then basically, like opens up a can of worms, a lot of issues. You do not have the accountants who are trained in IFRS. You don't have even auditors who are actually trained to verify the statements. So what are we going to do there? So people prefer the convergence approach, and that's what you see nowadays. A lot of new accounting standards that's coming out, they're converged. And if people are familiar, the business combination accounting standard is actually converged with IFRS accounting standard. People had concerns about geographic bias. I'll just talk about that in a bit. And in IFRS, there's not too much industry-specific guidance. So people were very, very skeptical about it. Then people are also skeptical about who's actually funding. Is IASB totally independent? So how the standards will actually be set up? And this also never actually addressed the concern for the private companies. So it was just like SEC was looking for the SEC registrants and just getting rid of, like, didn't talk or address the issues with the private companies. So basically, IFRS is impacting the US companies even today. So you have multinational companies, they are reporting under IFRS in the foreign jurisdictions. That's on one side. You have US companies acquiring targets outside of the US. And you even have other way around. You have US subsidiaries. You have a foreign company, which is a parent company, which is outside of US and have a subsidiaries over here. So if you see, a lot of companies are actually doing dual reporting. So a lot of companies, the multinational companies, might be reporting under two different GAAPs, and there's a lot of headache. And if we were to go totally to IFRS, it will basically solve a lot of trouble for, like, a lot of companies. And actually, in long run, it makes sense and cut down costs too. I did mention to you, I just want to briefly tell you about different versions of IFRS. So that's the geographic bias that comes in. Now, there is one IFRS which is basically issued by IASB, or International Accounting Standards Board. Now, if you were to file with SEC, they only accept any financial statements which are prepared as per the English version of IFRS that do not have to be reconciled to US GAAP. Now, what happened was, because of the different pressure from the different countries, they were adopting IFRS, they came out with their own versions of IFRS. So just to a famous one that was in Europe, this known as the European Union version of IFRS. So they didn't like a few sections of it. So they said, hey, let's strip this thing out. So it didn't remain IFRS as such. And I have been basically reading reports, like in India, the same thing, and Asia too, when they're trying to adopt IFRS. Hey, they don't like certain sections of IFRS because they think it might not be good for their countries, so they're stripping that thing out too. And it's, as we always talk about IFRS as principles-based accounting rules, it also depends who is going to apply and how you apply those rules. That's the geographic bias I talk about. You might get 100 accountants in the room, give them a very complex, non-routine transaction, and make sure you get them from 100 different countries around the world, and let them interpret it. And I'm very sure you're going to get different, like, diverging views. And that's one of the key challenges, basically, people think as to IFRS. People talk about comparability, but are the financial statements really comparable? And it's because of you have to make sure the financial statements have been prepared under which version of IFRS. That's one. And number two, you also need to see the geographic bias too. Now, just imagine yourself, if you're standing on what I call a intersection, what kind of traffic lights you will prepare for? On the left, you just see standard normal light green is to go, red is to stop, or you might have like a complex kind of like so many lights out there. It just gives a feeling of, on the right, I would say, more juxtaposing more towards like US GAAP. On the left side is more towards like IFRS. We give you a simple rule, and you just follow the rule, or just give you a simple principle, just follow the principle here. So let's moving on. This debate will keep on going on, rules versus principles, how it goes. So what I'm doing is just think about, like, it can be like a situation of a capital lease or operating lease. This is like, you think there are different lease contracts. So I just have like blue circles and the yellow circles and different squares in yellow and blue again. Think that there are different kind of lease contracts that you have, or you need to bucket them. So like, forget about it, like lease right now. Think like you have a situation. These are like different contracts with different characteristics. So how would you bucket it? So I'll just give you about a few seconds to think about it. If you were given a situation like this, how would you bucket them into two different buckets, like bucket A and bucket B? So normally I do this exercise with the people right in face, so it's better to see how people do it. And most of the people will either go one of the situations. They either will be answering, they'll go by shape. They say, let's put all these circles in one side. I don't care about the color. Or other people say, hey, I prefer the color. So we just saw right now, even with the same kind of facts that you had a few objects. And in a diverse group, like normally I get 50-50 or like 60-40 kind of split between the two. People will go either by color or people go by shape. All right. So let's like make it a little bit more interesting over here. So let's say if we had another kind of contract, which is like a different kind of characteristics. So where would you place it in? Would you go back, like if you had like originally started by color, would you go back and start it by shape? Or which way are you going to take it in, right? Because this is a different kind of contract that actually enters the whole picture, and you need to also classify it somewhere. So what I normally see is people like to go over the easy way out, and they say, hey, it's a circle. Let's go back by, even if people have originally gone back and bucketed things by color, they come back and say, let's re-bucket it based on the color, like the shape, because that's easier to do that. Moving on, for example, I give you more additional information here. Hey, the green ball actually had characteristics of 80% blue, or like basically blue and yellow mixed green, and it's about 80% blue in that, 20% yellow. So if I give that additional information to people, people say, hey, let's re-bucket it like this. So the idea, basically, the point, basically, what does it all mean over here? So what we have over here is we have, just look at the cartoon, which basically explains this thing. On the left side, there's a graph. You see the numbers going down. There's a different kind of accounting, or like convention. You have the numbers going up. And basically, it is you have applying the different interpretation to the same facts might result in a different answer. So that's the reality check for all the accountants. Life for accountants will not become easy when applying simple rules, like principles to complex transactions. And it is not interesting, or it's not like cool when actually you're talking to the auditors. You have a different view, and the auditors have a different view to it. And it can go back and forth, and it's like a lot of white papers, a lot of like visits back to the national office, and you really have to work hard there. To give a more like a recent practical application to this, there was like a revenue recognition draft. A lot of people would have seen this. Now, this is one of the webinars I had attended that was hosted by CITP. These are the 100-odd terms that were excluded from the revenue recognition guidance. So as a lot of people who are not familiar with revenue rec guidance, they are having a converged accounting standards between revenue, between IFRS and US GAAP. So they have a one common accounting standard. The overall concepts are same. There is just a difference in slight references down to the IFRS literature within it, but overall the concepts are exactly the same. So the principles-based rules. So they killed about 100-odd glossary items. The 3 slides that you see pasted there, that's a section of the terms that were like they have gone away, and they just replaced it by 9 terms or so. So what's going to happen here now? So people around the world are going to come with a different interpretation of what they think it is. And this is huge for like companies like software, biotech, the milestones method that's gone. You're talking about the core software, everything is gone. So what's the core software? Like people just implemented new accounting standards in the US relating to the software or multiple deliverable arrangements a couple of years back, and they have to rework it back again now. So they have to relook and see, oh, there's no definition as per GAAP, so what are you going to do it? Now coming back to the geographic bias over here, people in the US, they say, hey, I knew what the definition of core software was, how I applied it before. Now you pick up a person down across the world in Asia who has never seen the definition that existed before, might come with totally different interpretation. So it really depends when you're dealing, it gets more complex when you're talking about across the world how things work, and especially multinational companies gets more complex. When you start interpreting the complex, this complex rule, or maybe say simple rules to complex transactions. Now what I'll do is I will take a little bit, a few points, a few minutes over here, just walking you through the whole process as to if you were to go IFRS, how would you go about implementing IFRS for your companies. So you see it's like a big maze. You need to go back into your, really go back to the roots of the business, because you're actually changing the whole GAAP if you were to go and adopt IFRS. So the decision is still out there. There's no final decision as to how the IFRS will be incorporated here. But one thing I like to say is IFRS impacts all areas of the business. So first of all, people just focus on accounting and reporting, but it's not just accounting and reporting. So accounting and reporting is actually dependent upon the systems. So the way the business is done, people are going to change that. The thought process goes behind it. Even people have to be educated, the investors have to be educated. So much so you have to look at each and every legal contract. Like a legal contract might have, like you have a debt covenant in it, it makes reference to US GAAP. So that's the challenges that SEC is facing. Do you say make reference to US GAAP, or should you make reference to, say, IFRS? Or another way would be to incorporate IFRS totally into US GAAP as another section, and say technically even you're adopting IFRS, which is a part of US, actually you're still making reference to US GAAP and complying with IFRS. So that's the approach that was basically adopted in Canada. We just adopted IFRS last year. I've helped companies transition to IFRS in Canada before. So it's a lot of things here, and that's the reason it will take about 3 to 4 years before actually we transition to IFRS, because all the contracts might have to be vetted, have to be rewritten, and people need to really understand any kind of references made to income. Well, review of the business. All the companies, we are going to review the businesses as to how the business is actually done. So basically the companies will be looking into what kind of business they are in. Some companies are capital intensive, so they would actually have to look into their the business is based on PP&E. So the people basically will be looking at to review their businesses in detail. So based on which accounting standards impact them more. So over here, I'll just basically point in case, like giving a simple example for the property, plant, and equipment. Under IFRS, you need to depreciate each and every component separately. So for example, in the US GAAP, you have like a building. You take the building and depreciate it the way you want to do it. You just say land separately, building separately. But under IFRS, you say you break down the building into different components. You try to see like, okay, let's take a situation of a house. You take the roof. Roof has a house like a life of 15 years. The house has a life of 50 years. So you're going to depreciate these two things separately. So if you take an example of an aircraft, you say, hey, the engine has a life of X amount of years. The tires have a operational life of so many years. So you need to actually go there and basically compute the depreciation or amortization over a longer period of time. Just talked about that. Right, so basically the next step would be people are looking at the detailed analysis, and that can take up to like couple of years because people are reviewing each and every contract in detail, and it might take some time. Now, one point which I'd like to point out to people with the first slide, what point I have over here is the strategic choices. Now, like for example, you have a foreign subsidiary, you have a lot of cumulative translation adjustment account lying on your books, and a lot of people take IFRS as cleaning up the books process. So what they do is, under IFRS, there's an IFRS 1 that talks about how you transition to IFRS on the date of adoption. So it gives you some choices. There are known as strategic choices that a company has to really think about. Even if you have, I've seen companies in Canada and other places, they have close to $1 billion of losses, accumulated losses, which are basically lying in equity. You take it a wash through the opening retained earnings adjustment, and it's not going to hit your P&L. Similarly, there's some strategic choices to make a business combinations. You can go back and restate certain of the goodwill amounts so that in the future you are not hit with asset impairments or goodwill impairment issues. So these are a lot of things to think about on these issues. And another one key challenge that you will face would be IFRS are changing. So you have to be in touch because right now a lot of changes on IFRS are going to happen because of the Convergence project. By the time goes by, things will be I believe should be better. Moving on, so this is how you document everything. The different kind of tools to track the things. There's a plain vanilla, you keep on creating your directories, keep on saving your data. You have Excel to control it. I basically am working with a CPA firm to basically develop a kind of a software tracking tool. The slide that you see, the green portion shows that, okay, what issues have been closed. So you basically have 1,000 issues out there set up by the timeline. And basically we have which issues we are closing, which issues we are going to close. So if anyone was trying to go IFRS way and he wants a kind of a small demo on it, we just try and look for some pilots that we can basically test run the system on. Please feel free to contact me. You can find me on Proformative. Another one thing you have will be on benchmarking. When you actually start making the choices, you'd like to see what the financial statements are. I like the resource. You can search through Google. That's one way to go about it. I particularly like a resource known as DisclosureNet. It's a subscription-based software, but you can actually type in the keyword like foreign exchange adjustment or companies to change the functional currency on transition to IFRS. Something very specific wording. Actually, you can do it for US GAAP and IFRS, that kind of filings, and it will scan through all the filings for you. Right. I guess that's about it. Over back to you, John.
Okay. Well, that was an awful lot of ground covered in a short period of time. And once again, apologies to everyone for that bit of background noise we had. We are going to go ahead now, and this is something that we will be doing now and then once again at the end of the next presentation. In order to get CPE credits, we have these two brief polling questions. However, I would ask that you take a look at these and answer them even if you're not here for CPE credit. If you're on this webinar for learning about IFRS, or if you know about your company's plans for IFRS, please feel free to participate in this poll. I'll also take a moment here to remind folks that you can ask questions at any time via the question panel in your GoToWebinar control panel, and we'll queue those up and get to them when we get to the Q&A portion of today's event. So with that, I'll go ahead and close out this poll. We will have one more poll coming up later after Lucy's slides. And now I'd like to go ahead and introduce our next speaker, Lucy Lee. Lucy has a whole alphabet after her name, CPA, CMA, CITP, and a whole host of other items. She is an XBRL expert in the Advisory and Assurance Practice of RoseRyan. Lucy is a Deloitte alumna with more than 20 years of technical accounting and operational finance experience. She has been instrumental in launching RoseRyan's specialty XBRL practice, and she leads the Silicon Valley-based consulting firm's XBRL practice. Lucy has been active with the wider XBRL community, participating in a number of XBRL US and XBRL international working groups and SEC conferences. She is an elected member of the XBRL US 2012 Domain Steering Committee, an active member of the Best Practices Committee of XBRL US, and a voting member of the XBRL Global Ledger Working Group of XBRL International. In other words, she is an expert on XBRL, and she is going to take us through the latest and greatest on XBRL, recent update on what's going on with XBRL, and a discussion around best practices. Lucy, please take it away.
Thank you, John. Thanks for the warm introduction. It's my pleasure to be here to share with you the latest XBRL lessons learned and reveal what we can do to avoid common errors going forward. First and foremost, we will answer the question about why we have to get XBRL right. We will then review some best practices to ensure data quality, whether you are under limited liability protection or not. Next, we'll look at what is in the pipeline for XBRL, such as the 2012 US GAAP taxonomy that was just approved yesterday by the SEC, and other taxonomies that are in the works, as well as developing trends in the use of XBRL standards for non-financial data and integrated reporting. Last but not least, we'll round up the discussion with looking at XBRL around the world and how companies are utilizing XBRL to solve business problems. So why do we have to get XBRL right? What if we get it wrong, so what? Well, the XBRL exhibits that are invalid, that fail the SEC and technical validations will not be accepted for upload by the EDGAR system. And when that happens, your HTML submission will be accepted, but your XBRL exhibits will be stripped out of the file, and you will need an amended filing. So definitely not a situation that you want to be in. Also, you will lose your short-term eligibility requirement, such as S3 and S8. And if you're planning to resell unregistered securities, you cannot do so until XBRL is successfully filed. So at the XBRL US conference, the SEC confirmed that the XBRL data is now being used for review and analytics purposes. And they have seen an increase in the analytic license 5 times over the initial rollout. And yes, they're sending out comment letters to some registrants already. So don't be an outlier. XBRL information with substandard data quality can also be misleading and can result in potential liability, both with the SEC as well as potential civil lawsuits. Other than the SEC sanctions, you want to get XBRL right so that analysts can make good recommendations about your stock valuation. And it's never a good idea to report inconsistent or nonsensical information to a regulator. But some companies are still protected by the safe harbor provision. This may give them a kind of a false sense of security. But regardless of limited liability protection or not, companies should be concerned about the market and public relations reputation of having erroneous XBRL data in the public domain and being relied upon for investment decisions. So big market players such as Thomson Reuters, EDGAR Online are actively promoting the use of XBRL to a growing base of institutional investor client base. In fact, some analysts and traders have already been making XBRL-based decisions about your stock. So you might ask, how can that be? Well, data providers such as EDGAR Online and Bloomberg have been translating your data into XBRL format for some time. In fact, EDGAR Online has created a repository of restated data for thousands of companies reaching back a decade. So let's talk about XBRL lessons learned from the latest SEC staff observations. The SEC considers mapping to be the most critical part of XBRL quality control process, and that filers have incorrectly extended on elements that exist in the taxonomy. The SEC recommends using the SEC Private Previewer to view submissions before filing. But the SEC also reminds us that rendering will not match HTML submission, and there is no requirement that they match. Previewer may be a useful tool to check for completeness, but not for accuracy of the text selected, or any of the underlying details like negative values and negated label. So work with your service providers or software tools to extract contextual data from the instance document. This way, you can validate and review for correct precision and signage. Consider using validation tools from your vendors or other SEC test filing systems to make sure that your submission is technically valid before filing. And validate as often as possible because the SEC can turn on additional validations without notice. Completeness, did we tag everything? So don't forget your parentheticals. Your Article 12, Schedule 2, all your FX schedules, and any monetary amount in your superscripted footnote. There's also calculation links that are missing in the exhibit, and incorrect calculation weights. Anything that are spelled out or written out amount, like the number of years, no shares issued, all that needs to be tagged. While XBRL requirements on 10Q and K are relatively straightforward, but not quite straightforward for registration statements in 8K, so I want to say a few words about it. It can be rather tricky. One thing clear is that XBRL is not required for an IPO. And reason is that XBRL submission should always be, the first XBRL submission should always be a Q. And obviously with an IPO company, they have never filed a Q before. However, a registrant may voluntarily submit an XBRL exhibit with an IPO if they choose to. But for non-IPO registration statements like S1, S3, and S4, the key questions are whether the financial statements are physically attached or are they incorporated by reference, and whether or not the document contains a price or price range. So the general rule is XBRL is required when you attach physical financial statements in your registration document, and when a price or a price range is provided. Finally, a word on 8K XBRL requirements. To the extent that you revise your financial statements for restatements, discontinued ops, reporting segments, or change in accounting principle or error correction, you will be required to file an 8K. 8K is not XBRL on 8K is not required when you attach pro forma financial statements for your significant subsidiaries in accordance with Article 11 of Regulation Ethics for acquisitions. But whenever you're in doubt, always call up the SEC and find out. As dealing with 8K and registration statements can be rather complex, especially around audited versus unaudited numbers, and whether or not a price or a price range is set. XBRL US has been databasing all the XBRL submissions since the mandate. To date, we have 29,000 submissions with more than 8,000 companies submitted to the SEC database. And there were more than 372,000 data quality issues. And again, the highest on the list is negative values. Invalid axes member combination, which is your element and dimensional member combination, are not valid. Examples are shares issued versus treasury stock. Calculation weight is the other most common errors. So now how do we check for common errors? Let me review the guidance and talk about how to choose the right tag and tell your story. When reviewing your definition, it has to include material amounts and it can exclude immaterial amounts. And always choose the tag with the most narrow definition. And in the event that you have to extend, the SEC encourages filers to be consistent and borrow tags from the taxonomy. And watch out for negative values. Oftentimes, the signs in your HTML and viewer are presented as negative with brackets, but the raw data in your instance should always be tagged as positive. And why is this? Because the US GAAP taxonomy is designed to reflect a natural or an absolute balance. And think about your general ledger system. It shows your debits and credits rather than positive or negative. And it's helpful to think about XBRL the same way. If you see a negative number in your raw data, ask whether it makes sense for the balance to be negative. Always check the definition and determine if that element should be one way, like your revenue or an expense, or two-way, like your proceeds and payment, profit or loss, gain or loss. Other than looking at the definition, you can always review other filings for comparability and use software to check your calculation link base. The SEC also found confusion over the use of pure units, which are your percentages. And the only time when you can use pure units is on percentage, rates, and ratio, like your debt instrument interest rate. And the decimal should always be 4. And of course, the pure unit should not be used for useful lives, your EPS, number of employees, or common shares outstanding. So some of the XBRL best practices, always focus on quality. Look at the metadata rather than trying to match the viewer. Document your judgment on your tax selection as part of your disclosure control and procedures, especially around key mapping decisions, taxonomy choices, and data modeling around dimensions. Develop a cross-functional review team. Have your pre-close and post-mortem meeting. Discuss what went well and implement a continuous improvement process. A recent trend is to involve internal audit or other professional service to help with a quality assurance of review. Another best practice is to develop a documentation guide based on the SEC rules, the Agile Filer Manual, the XBRL US Preparer's Guide, as well as best practice minutes. Establish a compliance checklist to address data quality and compliance issues. And a good source of such a checklist can be found in Appendix B of the AICPA exposure draft on their agreed upon procedures. And for each of those XBRL quality attributes like completeness, accuracy, proper mapping, and validation structure, assess what could go wrong and implement a safety net and control environment to help mitigate risk of errors. Be also mindful of your 10Q and K difference because it could impact your XBRL tagging. For example, 10Q condenses your other I&E, whereas the 10K breaks them out into interest income, interest expense, or other income and expense. And this can cause comparability issues, filings over filings. It has also been observed that detailed footnote tagging creates 10 times the tag, but it does not have to be 10 times the work. So you can simplify XBRL tagging by simplifying your disclosures. And the more streamlined your disclosure is, the less tagging there is. And remember, it's the quality and not the quantity that counts. So when it comes to XBRL, less is more. Collaborate with your industry group to set taxonomy standards. Provide comments to the FASB on industry-specific extensions and help set the standards going forward. So we have limited liability protection until October 31st, 2014. So what does it mean when limited liability expires? At a minimum, you should have disclosure control and process in place on XBRL creation process. So what is disclosure control and process? So the best practice is to have a compliance and a technical checklist to provide the evidence of your due diligence, regardless of whether you perform your tagging in-house or outsourced. Quality, DC&P are very company specific, but you want to document your due diligence around, did I choose the right tag? Did I tag everything, completeness? Is the metadata correct? Did I have the right signage or unit type? Does it pass SEC and technical validation? So XBRL currently is not subject to officer certification or SOX. However, as technology continues to advance and XBRL gets built into your close process, it may start to fall into SOX environment. So typically, XBRL is bolted on at the end if you work with a service provider like a financial printer, but an integrated XBRL solution starts to use XBRL in the preparation of HTML financial statements, and when that happens, XBRL may be subject to SOX 404. So in addition, you may want to talk to your audit committee regarding an AICPA agreed upon procedure on your XBRL. AUP is not an opinion or an attestation. It's just a set of procedures to provide you some findings and some quality recommendations for XBRL files. I would recommend putting together a rigorous common error review program based on the SEC staff observations on commonly missed tags and appropriate extensions and tag review and tag errors review, and maybe even engage your internal audit your internal audit team to perform some AICPA AUP steps to help mitigate the risk of errors. So what's next? I talked about the XBRL US GAAP taxonomy for 2012 was released. Nothing was mentioned about 2009 when that taxonomy will be retired. The federal government is interested in potential benefits from XBRL. So there are several legislative proposals that have been presented to Congress that support the use of XBRL by federal agencies. And there are some recent bills that would require the collection of data in XBRL format for federal spending, health, and human services. Analysts continue to lobby for tagging earnings release table, earnings consensus, GAAP versus non-GAAP bridge, as well as some of the MD&A tabular disclosure and proxy data. Proxy actions, corporate actions such as stock split, dividends are currently piloted. There are 3 organizations. They joined forces to drive down the cost and mitigate the risk of corporate actions. And currently, it's being voluntarily adopted in a pilot program by 4 financial firms, including Bank of New York and JP Morgan Chase. And in the most recent XBRL and Financial Analyst Technology Conference last month, my star of the SEC is looking at efficiency changes within the SEC filing and the use of potentially using iXBRL and the filing of a single report to the SEC as a possibility. So iXBRL is inline XBRL. So it's a standard for embedding XBRL into your HTML document. This has been used by the UK for the tax returns. So changing to inline XBRL will relieve companies of the administrative burden associated with creating, coordinating, and reviewing the same information in 2 documents. By moving into inline XBRL, the discussion over when to tag, what is audited, and how much to tag becomes irrelevant, as the HTML and now XBRL sections are really one and the same document. Let's talk about XBRL beyond SEC compliance. So XBRL, as you all know, is an open standard focused primarily on external reporting to the SEC, but now increasingly being adopted to improve organizational effectiveness in risk management, internal controls, operational reporting, sustainability reporting, business intelligence, and more. For example, at the XBRL US Annual Conference, Microsoft discussed how they leverage XBRL to populate its investor relations website, while at the same time deliver data to the SEC. As more companies look beyond the compliance aspects of XBRL, they too may recognize that both internal and external opportunities with their XBRL data. This will require firms to bring the tagging process in-house, moving away from the current bolt-on to come after the fact tagging practices into a more built-in approach that integrates with their ERP systems. Companies are also realizing that XBRL can improve their internal reporting in the last mile of finance. XBRL Global Ledger Taxonomy has been getting a lot of traction as well. There are private companies and non-profit implementing the Global Ledger. So think of the XBRL Global Ledger as the glue that links your financial and your non-financial data across disparate systems. So data are tagged at the transaction, at the chart of accounts level. And XBRL GL has tremendous downstream benefit in the whole business information supply chain, such as in virtual close, continuous monitoring, and auditing. So last week at the XBRL International Conference, Deloitte, together with the GRI, the Global Reporting Initiative, have launched the new XBRL taxonomy for sustainability reporting. Data on sustainability performance of companies, including carbon emissions, water use, and human rights infringement, can now be easily tracked and reported using XBRL taxonomy. So XBRL is also going green. As you can see from this list, there are many different XBRL projects underway around the world. And a number of countries are moving towards standard business reporting where multiple regulators are adopting the XBRL standard using a common language in Belgium, Netherlands, and Australia. And there's also a growing interest in Solvency II for the European Insurance Occupational Pension Authority. Then there is the XBRL Risk and Control Taxonomy, which is developed by the OCEG, and it can be used for enterprise risk management and SOX control assessment. So beyond financial and non-financial XBRL reporting, we have other uses of XBRL, such as innovative journalist software that automates the writing of articles based on XBRL data in SEC filings. For example, Market Brief is a new startup company in Mountain View, California. They're pumping up stories in seconds using extracts from the SEC XBRL database. So other XBRL applications include crime statistics for law and enforcement and homeland security, healthcare data for health providers and insurance, and clinical trials and research and development in the life sciences, along with risk management and risk abatement in general corporate environment. So these applications will help drive XBRL adoption exponentially in the next few years. With that, I'd like to hand this webinar back to John. Thank you.
Thank you so much, Lucy. Greatly appreciate that. I'm going to go ahead and launch the second poll here, and I'll note that we neglected to leave a choice for those who are not using XBRL at their companies. If you're not, go ahead and leave it blank. Even if you're here for CPE credits, we'll credit you for this. We can still see that you're on during this part of the program. But for anyone who is utilizing XBRL, we would love for you to answer this poll question, whether you're interested in CPE or not. We'll leave that out for just a moment. I'll remind folks, if you have any questions, now would be the time to ask. We're only going to have time to get a few questions into our panelists, and we'll do our best to wedge a couple in before we close things out here today. So I'm going to go ahead and close out that polling question. We'll move to the Q&A now, and I'm actually going to just ask a first question out to Sunil briefly here, since we only have a few minutes to go. What is the current timeline for IFRS convergence and then required adoption in the U.S.? What's our visibility to the timeline right now?
Right. There's no current timeline as of yet. There's a lot of debate on it. SEC was supposed to come up with a decision sometime spring of 2011. Then it said they required some more time to look into it. Then there was like an AICPA conference in December last year. It said, okay, another few months. So basically, I would expect some kind of decision from SEC sometime this year to have a direction. And there's no actual requirement by any U.S. company to report under IFRS. Now, AICPA has been trying to push forward for an optional adoption, like if some companies would like to optionally adopt IFRS, try to provide that kind of option here. But overall, there's no timeline, John.
Okay, well that's a little distressing, but I guess that's the latest and greatest. So we just have to sit tight and wait for them to get things figured out, and then undoubtedly there'll be a whole adoption timeline and roadmap. So stay tuned, everyone, for that. A quick question for Lucy here. Do you recommend when a company is first adopting XBRL that they use a service provider first, then migrate to in-house technology and personnel?
Yes. I would recommend in a company who have not implemented XBRL to work with service providers and learn the tagging and the process and the SEC rules, and then gradually transfer that knowledge in-house and bring that process in-house. There's a lot more efficiency involved in that, less time involved in the back and forth coordination, and less pencil down time as well.
Gotcha.
Absolutely.
Great, thank you. And I hate to say it, honestly, we're getting right near the end. There's a couple questions queued up. What we will do is work with today's speakers and get those questions posted out on Proformative and answered. We appreciate your patience. We just had a lot of content to get through today. So feel free to ask any questions you want still through the questions panel, and we'll just make sure we get those out onto Proformative. A few items of housekeeping here. Number one, you can see the email for Dawn Moore at the bottom of this slide. If you have any questions about CPE credit, please contact her. If you pre-registered for CPE credit, you will simply be getting your certificate via email within 24 hours. This slide presentation is already up on Proformative under the resource area, and there are a lot of other resources there and on Proformative more broadly around both IFRS and XBRL. I would love to directly thank Sunil and Lucy for their time and insight. These two folks are as steeped as anyone you will find in IFRS and XBRL respectively, and we appreciate your giving us your time today. I would also like to thank Host Analytics, who made this entire event possible. Thanks to their generosity and care for folks in corporate finance, accounting, and related functional areas, we can put this event on and everything we do at Proformative for no cost to our users. And with that, I would like to thank all of the attendees today. We greatly appreciate your giving us your valuable time. We look forward to seeing you again at a future event or online at Proformative.com. And being mindful of everyone's time, we will let you go. Have a great week, everyone, and we hope to see you again soon. Thank you so much.